In this video, traders, we're going to look at the power of the simple moving average. Yes, it's dull, yes, it's boring, it's the first indicator that you learn in trading, but actually knowing when to use them can give you a little bit of extra edge. Stay tuned. Hey guys, warm welcome to you. Alright, so SMA, pretty much the first indicator anyone gets exposed to, a moving average, exponential, whatever it may be. We use a simple moving average in this example. And what I want to kind of cover in this video is, don't rule out the simplicity of an average of any number of price only look back that you're using. We're using a fast or a slow, and we'll talk about some of the numbers in a minute, some of the parameters. Because actually in certain conditions, it can be so useful, and the specific conditions I want to cover are when you are in a trade. So yes, we have moving average crossovers. Yes, we have all these kind of entry signals, price crossing the MA, etc. But really, I think, and from my perspective, and yes, I do have a strategy specifically using one moving average on a pullback type trade, but really they come into their own when you're trying to hold trades for longer. It's a very, very simple way to go, hey, you know what, I'm going to let the market take me out of the trade. So you're in the trade, it's a winning trade, we're all trying to run those trades longer, we're all trying to kind of push ourselves and get onto those runners. But we tend to kind of take profits too early, we tend to snatch it, first sign of reversal we come out. Let the market take you out of the trade. And here's a couple of ways that you can do it. Anyway, right, moving averages, let's get on it. Trend. Go to our functions here, and we're going to put on some simple moving averages. Now, I basically group my moving averages into three. Now, there are more obviously, but I like to group them into three. And it's a 5, a 10, and a 20 period moving average. And what I'm doing with this is, depending on the type of trade I'm taking, I'm going to use these as a trailer. Now, a 5 period moving average is when you're trading a very aggressive breakout type trade. So for example, what have I got up here? I've got a USD JPY on a 5 minute. So let's say you've taken this breakout type trade. Okay, it's popped out this range, wherever you took it, you're in. Now a 5 period will take you out on the first kind of pause. So you have to think about, what is this showing me? The 5 is very tight to price, especially same in the daily, whatever time frame on the 5 minute here on USD JPY. It's very tight to price, it's going to take you out quickly, but it's going to keep you with those explosive moves. So very good for day trading, very good for taking those intraday breakout type trades. You're in the trade, you're in the deal, bang, it goes. It's kind of running, you don't know where to come out, you're coming out 20 pips, 30 pips. Let the price take you out. So the first close below the 5 period moving average, that's when you come out. So it's like a trailing exit, if you like. So there's our first close below, it's just there, bang. So we're out here. Now rather than you kind of, maybe you took this and you see this little pause and, I'm going to come out, I've only got 25 pips and it's going to reverse on me, I'm scared of giving it back. Let the market take you out. Get your 5 on, you've not closed below, and bang, you get almost double what you expect. Comes down here, shimmers around a little bit. I mean, it could have gone a third and fourth leg, and this is where you get on the end of real explosive moves. It didn't, you're out, you've let the market take you out. Perfect. So the 5 is for those explosive breakout type trades that you're trading intraday. Right, the next one we're looking at is the 10. So the 10 obviously sits between the 20 and the 5. But what the 10 is doing is, it's when the market is a little bit. Let's just get rid of the 5 actually, guys, and we can easily do this by right clicking. Objects list, indicators, and we'll get rid of the 5 for now. So what the 10 does is it keeps you in slightly more aggressive trends, but not shallow trends. So the 10, and guys, this is where your kind of trading skill comes in. There's not a binary specific set of rules. It's like, okay, what type of trend am I in? Normally, if the trend is more than 45 degrees, you're probably into the 10 period. If it's really kind of really aggressive, you're into the 5 period. But something like this, example, you took the break to the downside here, again, a breakout type trade. You're following the trade all the way in until it closes above. Happens to close above here, fine, you're out. And it would have been nice if it closed a little bit further and you got the extra juice and came out here, of course. But hey, this is not a silver bullet. What it does is it keeps you in these sort of consolidations, which often get you out of the trade. If you took the trade day, took the break, you're like, yeah, great, I'm up 40 pips, whatever it is. It's sitting there. You're thinking, oh, should I take it out? Shouldn't I? And actually, finally, it gives you another leg. So it, again, keeps you into the trade. 10 period, very useful for that type of thing on a slightly less aggressive trend, but nevertheless still got some meat behind it. And all right, one of the ones that the final one actually is the a 20 period EMA. So we've got the 20 period SMA, 20 period, and I'm going to put it on here, and I'm just going to get rid of the 10 as well, guys, just so we can see. So we go into objects list, we go into indicators, and we just knock off the 10 here. Right, so in this example, this is when you want to give things a bit more room. So you're not looking for great explosions, because this is where the downfall of it is that it gives back too much. For example, you're in this kind of drive up, it pulls back, you're giving back way too much, and the thesis of this is look at the kind of direction. You know, if you see the kind of angle on this is very, very steep. That's not a 20 period one. It's not really a 10. It's a 5. You know, you go back to back here. This is reasonably steep. It's not really a 20. It's a 10. But if you want to stay in the trade and you have a longer, broader thesis, so let's say you've gone out on your higher time frames and you've gone, okay, well actually, and let's just use JPY as an example here. You've gone out and you thought, hey, you know what? I think we might break this low here. We think we might break this kind of low from multiple days. And I think if we do that, and I can zoom out, then it opens up some of these territories here, opens up some of these levels. And let's draw a kind of horizontal line here. And that's what you're thinking. You might be prepared to give some more back. So what would you do? You would use a slightly wider kind of trailer, and the perfect thing for that is, I'm trying to do some of my trackpad by the way, guys. A perfect thing for that is a 20 period moving average, because a 20 will keep you in the trade. Now, don't forget, go back to your time frame that you've been trading on. Don't start switching time frames. But this here now is what keeps you in the trade for longer, because it allows the market to unwind. Look how long, in 5 minutes we're going multiple times, and now who knows what can happen. Maybe it'll stop you out, but it gives the chance to curl over for the higher moves. So don't forget, if you're looking for the bigger moves, extended moves, price is going to expand, contract, consolidate, backfill. It's not going to go from A to B in one direction, so you have to sit through some kind of pullbacks, some kind of oscillations. And if it decides to stop you out, then great, but you've given it chance. And again, you've let the market take you out of the trade, rather than constantly trying to think, is it going to go, is it going to stop, is it going to reverse, is it going to that. And you can be at peace with how much profit you've got. So if you're using the 20 period, you took this break here, you're like, fine, well, even if it does a big move and closes above here now, worst case scenario, that's my exit. So you can be comfortable in your mind, you know, giving back too much profit. Whereas if you didn't have that, you're like, oh, where do I come out? Should I come out above here, above here? It's a very systematic way of trading. So summary, guys, use your 5 if you're very, very aggressive breakout type trades that you want just that momentum move only. Use your 10 if you want to kind of stay on the aggressive trades, but not kind of real momentum type things. But, you know, good moves, good kind of good angle to them, maybe above 45 degrees if you're talking to the or less than 45 degrees, should I say, if you're an uptrend. And then use the 20 period if you're prepared to sit through some pullbacks, some oscillations, and you have higher targets in mind. So they're very simple, guys. Simple moving average, 5, 10, 20. We tend to forget about them, but they can be super powerful. There's a link to them in the description below. Take care. Bye-bye.